Alphabet just delivered a $100 billion quarter, and SoundHound AI is just a tiny little company growing revenue more than 200% in some quarters. Two completely different scales, two completely different risk profiles. And one question that investors keep asking, which one actually makes investors more money from here? Well, Alphabet trades at around $318 a share and has gained over 2,800% in 20 years. SoundHound expects up to $180 million in revenue for all of 2025, which kind of makes Alphabet about almost 600 times bigger. And yet people are still buying both. Why? Well, Alphabet is turning its existing dominance in search, cloud, and YouTube into AI products that are used by billions. On the other hand, SoundHound, they're trying to become the voice layer for everything: cars, call centers, smart devices. And if that bet pays off, the upside could get wild. And I think what most of us are missing is that Alphabet is executing at scale while SoundHound is racing to hit profitability before its cash runs out. In this video, I'm going to break down Alphabet's proven execution, SoundHound's moonshot potential, and how exactly I decide which one belongs in a long-term portfolio. Now, if you're new to the channel, my name is Rick Orford. I've been trading since 1999, and no, I'm not a financial advisor. That is a good thing. I break down the numbers so retail investors like us can make smarter, more confident decisions with our money. By the way, I wanted to give a quick shout out to our friends at Moomoo for sponsoring this video. I gotta say, I'm loving their AI assistant. I mean, it's kind of like ChatGPT, but it's connected with real-time market data, so you can get in-depth and pinpoint analysis. And if that's not enough, new and qualified users from the States can get up to $1,000 worth of NVIDIA stock and up to 8.1% APY for a limited time with their cash sweep program. Scan this QR code or check the link in the description to see why 27 million users trust Moomoo for their everyday trading needs. Right now, Alphabet stock trades at around $318 a share, and at that price, the market is clearly expecting more growth ahead. Over the past 5 years, the stock has gained around 218%, and over the last 20 years, it's up over 2,800%. And that long-term growth is impressive. The question is whether they can keep compounding at this scale. Earnings-wise, Alphabet just posted its first ever $100 billion quarter in the third quarter. And that milestone matters because it shows that their core businesses still have momentum. Just 5 years ago, they were doing $50 billion a quarter. Now, they've doubled that. And this is what happens when a dominant company converts its existing advantages into an AI-powered business. And doubling revenue at this size, it's kind of rare, which is why Wall Street is paying attention. And the financial results, well, they're very strong across the board. Net income came in at $34.97 billion. That's $2.88 a share. So they're not just growing, they're printing cash. And then Google Cloud, it delivered $15.2 billion in revenue, up 34% year over year. And cloud strength is important because this is where most of the AI revenue eventually flows. And if that's not enough to be excited about, in the first 3 quarters, Alphabet signed deals worth over $1 billion. They signed more of these billion-dollar deals than it did in the 2 previous years combined. And when enterprise customers commit billions to your platform, they're betting everything on your technology. And these long-term deals, they create revenue visibility that investors absolutely love. The AI integration is happening rapidly. Alphabet processes over 1.3 quadrillion tokens monthly. I can't even recognize that number. I mean, it's hard, right? That's up more than 20 times in a year. So people are using Google's AI systems at a massive scale, and the demand is accelerating. Of course, AI overviews, we all know this from Google searches, now serve over 2 billion monthly users across more than 200 countries. And these are the AI-generated summaries, right, that you see at the top of the search results. So AI is already baked into the products that billions of people use every single day. And cloud deals, they also keep growing. Contracts over $250 million doubled year over year. And this tells you that the major enterprises trust Google's platform enough to build their entire infrastructure on it. And once a company builds on your cloud, switching becomes incredibly expensive. Alphabet also has over 300 million paid subscriptions across Google One and YouTube Premium. And that's an incredible subscription base that gives Alphabet some predictable cash flow during economic downturns. And then there's Waymo, which provides more than 250,000 fully autonomous paid rides every single week. These are real commercial rides happening right now, but it's still small compared to their main business. But it does show that they can move experimental projects into actual revenue generating services. And Waymo is proof that Alphabet can turn long-term bets into real businesses. The investment case for Alphabet just comes down to execution. They already own Search, YouTube, Android, Chrome, and Enterprise Cloud. They're not betting on unproven technology. Instead, they're upgrading what already dominates today. And upgrading proven products is far less risky than building new ones from scratch. And if they use their existing resources, that's a bet on superior execution with incredible scale. And scale is the ultimate mode in AI because the biggest players can outspend everyone else. Now, let's look at the moonshot AI investment. If Alphabet's an aircraft carrier, SoundHound is a speedboat just making fast moves. But the size difference, it's extreme, right? Alphabet did 100 billion in one quarter, and SoundHound expects between 165 million and $180 million for all of 2025. And that gap sets the stage for two completely different kinds of returns. But size isn't everything. SoundHound's revenue in the third quarter rose 68% to $42 million. And for a small cap company, that growth rate is the whole story. SoundHound AI builds voice AI technology. This is the software that lets you talk to your car, your phone, or even smart devices. And they compete with Amazon Alexa, Google Assistant, and Apple Siri. And their advantage is by offering businesses a customizable option that doesn't lock them into those big tech ecosystems. And that independence is appealing to companies that don't want to be tied to big technology. Now, recently, SoundHound acquired a company called Interactions, and this is a company that does customer service AI. The technology is supposed to automate phone support and customer interactions. And customer service is one of the biggest markets in AI, so this totally expands their reach. Management expects 75% of customers to migrate onto their new Amelia 7 platform by mid-2026. That's their conversational AI system. And if that migration sticks, recurring revenue, I think, will start to ramp up quickly. Now, if we look at the balance sheet, it's also very strong. They've got around $702 million in total assets with zero long-term debt. And that provides runway. And runway buys time, and time buys opportunity. It's a flywheel. But of course, there are risks. SoundHound lost nearly $110 million in the third quarter alone. And losses this big can spook investors if the growth slows down. Now, this $110 million also includes $66 million mark-to-market loss. It's an accounting adjustment based on how their financial investments or how their investments are valued. It doesn't necessarily represent actual cash going out the door or being spent. But the real cash burn is actually smaller than that headline suggests. But even adjusting for that, the company is still losing cash to grow in the future. Gross margin is 42.6%, which shows that the economics could work at scale. The only question is whether they reach scale before the cash runs out. And that's why timing is the entire risk profile for the stock. It's why I think SoundHound could be the moonshot opportunity today. They're racing towards profitability, while spending heavily on expansion. The bet is that voice AI becomes the main interface everywhere, right? If that happens and execution is solid, well, current size becomes irrelevant. But if adoption slows down even slightly, that runway I see to get a lot shorter. I think investors could see the stock multiply 3x or even 5x over the next few years. But if the timeline slips or voice adoption slows down, that cash position becomes a serious problem. That's the double-edged sword of early-stage AI investing. So how do you choose between the two? Well, call me biased, but personally, I think Alphabet is for investors who want current profits, AI exposure without execution risk or lower risk, and multiple revenue engines all working simultaneously. I mean, no startup can match Alphabet's advantages. You're paying for stability with upside instead of upside with volatility. It's proven, it's not overvalued, and I prefer to sleep well at night because that's just the kind of investor that I am. On the other hand, SoundHound I see for investors that are comfortable with volatility or those who want to sprinkle their portfolio with some high-risk opportunities with the potential to 3 or 5 times the returns. I wouldn't say it's a core holding. I'd say it's a calculated swing. Also, time horizon matters here. I've owned Alphabet for more than a decade. For me, it's a forever hold. They generate massive amounts of profits today while investing to stay ahead for tomorrow. So that's what I've got for both companies. What about you? Are you leaning towards one or the other or both? And why? Let me know in the comments below. And while you're there, do hit those like and subscribe buttons because it'll help others find the video, it'll support the channel, and you won't miss out on my future deep dives. Well, that's it for me today. I want to thank you so much for watching, and I'll see you next time.